Howdy, Jacob here. Today I'm going to do a more in-depth analysis on Ternium SA, ticker symbol TX. When we did this initially, we got to a price that looked like it was a screaming deal, and so I want to go into further review on this company, go over some of the notes for that I got from their most recent earnings report and 20F, and put in my new assumptions and go over that. But before I do that, I just want to remind everyone this is definitely not financial advice. Do what you want with it. This is meant to be reviewed in conjunction with your own analysis. Now we can get to the reminder of the company. And so Ternium is in the metals and mining industry. They have a market cap of $7.6 billion and a $4.5 billion enterprise value. Price to book of 0.5, PE 25 currently. Their growth has been relatively small for a little bit and then jumped humongously post-COVID, almost doubled. But in the last 10 years, we're looking at almost double in revenue. And on a return on invested capital side, the last 2 years that have been very heavy on positivity for these types of products. Their return on invested capital has looked very good. But it's a pretty cyclical business depending on the price of the iron ore that they get to sell from what they protrude from the soil. And so on a margin standpoint, both operating and gross margin are actually up from 10 years ago, from 22.6% to 23.9% on gross margin, and then 13.0% to 17% on operating margin. But again, it's pretty cyclical, so that might not be comparing true apples to apples periods. Their balance sheet looks good. They have about $3.5 billion in very liquid assets that could be short-term investments, cash equivalents, and then their total debt is $1 billion. Their free cash flow has improved quite a bit, and their capital expenditures are actually down, interestingly enough. So their free cash flow is very positive. And their dividend payout for that 7% yield is about $1 billion. That includes an annual dividend and then an interim dividend, which I'll go over the notes right now. So these are some of the notes that I took from reviewing earnings reports and the most recent 20F. The first is it's an advisory share out of Luxembourg, so you only get the 20F for what we would call our SEC filings here in America. And so just that's something to remember, that only once a year do you get an in-depth review of information. Obviously, they do have quarterly reports and they do have quarterly financial statements sometimes, but keep that in mind. After reading some of the quarterly reports, it appeared that the most important metrics were iron ore shipments, EBITDA, and then free cash flow from quarterly free cash flow. So it was cool that they said free cash flow. That's one of the big things that I want the board and directors and CEO and stuff to talk about, since that's what I care about most. I care most about free cash flow. And so it's cool that, iron ore shipments is great because that's part of their business. And then EBITDA could not care less about, but free cash flow I definitely care about. And then most of these numbers I'll be doing will be 2022. And if it's year over year, it'll be full year 22 to 21. Again, that's because we haven't received the 23 20F yet. And so in 2022, Ternium purchased almost all of its third-party iron ore from VALE, a Brazilian company. That's just to name something that's a possible risk. It's the only one of the risks that I felt needed to be written down. All the other risks seemed pretty general and specific to the market as a whole. And the thing is, this is pretty common for this type of business, and so I wasn't too concerned about it, but definitely wanted to call out one of the risk factors there. And then in 2022, and there was shown 57% of shipping volume coming from Mexico, 20% from Southern region, and then 23% from other markets. The Southern region includes Argentina, Bolivia, Chile, Paraguay, Uruguay, And then the other markets include the US, Colombia, Brazil, and Central America. Mexico and other markets had slight sales declines year over year, pretty much flat on the Mexico side, and then 3% down sales on other markets. And then the southern region increased 14%. But again, the southern region is the smallest portion of shipments and revenue. And so just wanted to point that out. Their current borrowings, and I don't mean that in current in 1 year, but their borrowings as of this time is about $1 billion, and they are due fairly soon. So the 20F will come out shortly, but they're 499 million due in 2023, 523 million in 2024, and then 10 million in 2025. And so we'll see if they increase this or not, or whether they'll just become an interest-bearing, debt-free company, because their debt has actually gone down since 2017. It's slowly gone down, and so we'll see whether they issue more debt or not. That'll be interesting. And then just something to point out that their debt is soon. So on the most recent report, we want to see how they've paid that out. Chairman, vice chairman, and 4 directors have been a director for at least 16 years for the company. The chairman is actually the grandson of the founder of the group of companies that controls San Faustin, I believe. And he's the director and president of San Faustin. The reason I bring that up is because 65% of shares are controlled by that group, with just 21% held publicly. And so that's just another point out of they have majority shareholders or majority share holdings. And so that could be good and bad. Bad in the standpoint that, it's really just on them of what happens to the company. But the chairman and CEO of Ternium is the CEO, or he's not the CEO of Ternium. The head chairman of Ternium is the president of this group. And so there is insider ownership, technically, I guess, because he doesn't actually, I don't know if he actually works there, but is the head chairman. And so hopefully, they do the right thing for the shareholders because they have a huge interest in the company. Their dividend is not quarterly. This is just a statement, not good, bad, or ugly, but we are looking at the dividend yield. And so the dividend is actually an annual dividend. And then in the most recent years, they've also included an interim dividend. And so depending on the earnings and such. So I believe it was $1.10. I don't know why I didn't write this down, but I believe it was $1.10 for their annual dividend. And then they paid out interim $1.80 or vice versa, whatever it was. Their shares have been flat over time. So from a capital allocation standpoint, none going towards share repurchases. Their average capital allocation of the last 2 years was 31% going towards other investments, 25% to the dividend, 16% reducing debt, and then 28% increase in cash reserves. And so some of my new assumptions, you'll see that things are relatively just a little bit more conservative. And then when you get to P and price to free cash flow, we see very different numbers. And that's because when I look at their historical price to free cash flow and price to earnings, it seems to be much lower than market. And I don't necessarily know why that is. Could be ADS, could be different reasons, because it's not due to debt. But I did have to change that. I did feel comfortable changing that to represent more on historical figures. And then here, the only thing I'm going to do is I'm going to drop it by 25%. And I mean, they can't afford it. I just said that the last 2 years was 25% of the dividend. But this is just me saying they did have an interim dividend, which depends on earnings, which have been very high recently. Obviously, last year was a lot higher from the margin standpoint. And so I think when I'm just trying to normalize their earnings. And then they also use different things for reinvesting into the self and then debt reduction for the next couple of years. And then they've just been increasing cash, probably for acquisition purposes, I presume. So that was my in-depth review on Ternium. I hope everyone enjoyed it. and enjoys their own analysis. So thank you and have a good rest of your day.